All right, traders, today I'm going to be showing you a trading example on Zoom stock. This is going to show you how you can capture trends, pull these trends right out of the stock chart, and then use that to your advantage to trade price action. As you know, history tends to repeat itself, and I'm going to show you some patterns, some technical analysis, some strategies, and how you can trade price action to your advantage in the stock market so you can consistently make money. If you enjoy this video, make sure you smash the like button, and here we go. So this is a daily chart. Each one of these candlesticks represents 1 day's worth of price action. And what I wanted to point out here was whenever Zoom has a massive gap up, or whenever Zoom tends to be a multi-day runner and continues to spike and hits that major resistance level, Zoom tends to sell off and has a nice, short-term pullback for a short selling opportunity, whether you short the stock if your broker has shares to short, or whether you have, put options. But anyways, what I wanted to point out here was this is the trend, this is the pattern, this is one example. Notice how Zoom is having a nice run, and then it has this massive gap up, and then it forms this trend reversal candlestick. So I want you to keep an eye on this candlestick right here, keep an eye on this candlestick right here, and keep an eye on this candlestick right here. Notice how when Zoom is trading out major resistance, and then it forms these trend reversal candlesticks right here. So this top wick, this is a bearish trend reversal candlestick. This top wick right here, this is a bearish trend reversal candlestick. This top wick right here, it's a bearish trend reversal candlestick. So when the stock forms these candlesticks on the daily chart, the next day it tends to sell off. You can see right here, it forms the candlestick, sells off, multi-day sell off. You can see right here, it forms the candlestick, sells off the next day, forms the candlestick, sells off the next day. So this offers very nice swing trading opportunities, and I'm going to show you how you could have used this to your advantage. So this is what I wanted to point out. Look at this pattern, and you pull these patterns directly from the chart. I'm getting this information from the chart. It's not by reading some sort of textbook. It's not by watching YouTube videos. It's not by buying someone's course. It's literally looking at the chart and visually seeing. That's what I'm trying to do. I'm trying to show you things that people normally don't see when they look at stock charts. So I'm trying to show you how you can pull these trends, pull these patterns directly into your trading strategy so you can then use that to consistently make money. So check this out. Right here, there's a clear resistance level at $478, and then it forms that trend reversal candlestick that we talked about. When you see this top wick at a major resistance level, stocks tend to sell off sometimes a couple days, and we're going to get more advanced into this, but let's just cover the basics. So this is what I want to point out. Major resistance at 478, stock gets crushed, it goes all the way down to 345. Now watch this. Notice how once it breaks out, and then it forms a similar candlestick, just pay attention to the top wick. Here's the top wick bearish. So this time it breaks out, but it forms that top wick, and then it sells off. Next day it sells off. It goes from a high of 529 all the way down to 457, right? And then here we go again. It retouches that resistance level, and then it gets to a high of 519, so it puts in a lower high, and then the next day it sells off 463. Now, this is where it gets interested. This is where it gets interesting. Notice how this resistance level right here is now turning into support, hence the stock breaks out. But then once it forms this bearish candlestick, trend reversal candlestick, it sells off. Once it forms this bearish candlestick, trend reversal candlestick, it sells off. So your new resistance level is right here at 528. Now watch what happens. Zoom breaks out just like it did right here. Remember, it was breaking out, new all-time highs, gaps up, forms that trend reversal candlestick, bearish sell-off, and then here we go again, turns this resistance level into support, and then that candlestick forms, bearish sell-off, candlestick forms, bearish sell-off, nice swing trading opportunity. Could have got some puts or could have shorted the stock if broker had shares to short. Now look at this, the same exact pattern. Zoom breaks out above these all-time highs like it previously did right here. And notice how once it forms this bearish candlestick with this top wick, what does it do? It sells off. So notice how this pattern right here literally repeated itself right here, and all you had to know was that candlestick. Notice how Zoom breaks above all-time highs. Once it turns it into support, after that it forms that bearish pin candlestick. Once you see that bearish pin candlestick, you could short, swing trade overnight. So that's that daily chart pattern. History literally repeated itself, guys. It is so simple. And it's also a key breakdown to short once it goes below this, and then once it goes below that, right? Those two red lines are special. So I hope you see that pattern. Now I want to break it down in terms of the 5-day chart. So this is that bearish candlestick, right? And what I want to show you is, let's go over this here real quick. These are the previous closing prices. So we know that Zoom is due for a sell-off because it's extremely overbought in that pattern within the daily chart. That's what we're basing this off of, purely technical. And then we also now have these previous closing prices. So these are trend reversal prices. The previous closing price, that's what these white lines are. I like to call them trend reversal prices, meaning when the stock hits that specific price, it can potentially have a reversal. So these white lines represent these gaps waiting to fill. So check this out. So we know in terms of daily chart, Zoom is going to be a good short, but how do we know, in terms of when to get in, and how do we know in terms of when to get out, where our price target is going to be? So take a look. It's most likely going to have a couple red days right here. It had, red day right here. It had a couple red days. So let's just take a look at this here real quick. So it had a massive ramp up. You could see it went from 505 to 588 in just 2 days. And then once it hit 588, it went all the way down to closing at 568 week close bearish candlestick, right? So the point I'm trying to make is looking at this from a daily point of view, if it goes below this previous closing price, which is at $568, it is most likely going to go to the previous day's low, towards that gap waiting to fill below, which is going to be at 559. And then if 559 cracks, it's going to go back to this one at 536. Now let me break this down to you in terms of a 5-day chart and in terms of entry and stuff like that. So in this example, it's going to be a key breakdown short entry. So once you see that that stock is forming that bearish candlestick into the close, you're going to be like, wow, this is closing weak, and you see the pattern on the daily chart. You could then short it and hold it overnight. Or you can wait till the next day and try to short it if it hasn't crashed, big enough. So anyways, let's just say we short it, we hold overnight, do that pattern. Or you can even wait, in terms of the next day if you want to play it safe and stuff like that, or if you don't want to swing trade and stuff like that. So check out this pattern. This is what I'm talking about. Just visually look at these white lines. So right here, if this turns into resistance, which it did, the stock is going to go to this white line. Now, if this white line turns into resistance, which it did, you can see right here, this is the top, it turned it into resistance. It is then going to go to the next white line, which is all the way down here. So it's pretty simple in terms of what we're looking at here. You can see it gapped up, and then you got these gaps waiting to fill. So there's a gap waiting to fill right here. It closes the gap, and then it turns this new gap into a resistance level, turns this gap into a resistance level, and then there's a gap waiting to fill below right here. So what I'm trying to point out is, just visually look at this chart. If this white line turns into a resistance level, which it did right here, this is your key opportunity to short if you're going to go with that intraday trade and not short the day before and hold overnight. So you'd want to short it right here because it turned this previous closing price into a resistance level. And then once it cracks below, you see how it reacts. So once it touches this, if it turns into support, which it didn't, it started forming new lower highs. And then right here was your confirmation, top of this candle that turned to resistance. That's your confirmation to continue to hold. Now, if the stock were to bounce off this white line and start to break out, you would want to cover, you would want to get out of that short, because then it's going to go back to your initial entry. It's going to go back to this white line. So the overall trend direction, since it turned this to resistance level, since it turned this into resistance level, is bearish. And then what it's going to do is it's going to start to fill the next gap that's waiting to fill below, which is all the way right here at 536. And then once it hits 536, if it turns it into support, you would then want to get out. If it turns it into resistance, cracks under, turns it into resistance, then you would want to continue to stay in and hold towards the next white line, which would be towards 510s. And you could take profits along the way, but you can just visually see. So here's the next day, it turned the white line into resistance once again, and then there's a gap that's waiting to fill below towards there. So that was just an example in terms of one of the things I like to look for. You just have to pay attention to those previous closing prices. But yeah, those are just some of the basics, guys. If you enjoyed this video, let me know, smash the like button, and I'll see you in the next one.